Hello there, and glad to have you join us on this fresh episode of Africa Business Weekly as we bring you highlights of the biggest conversations from the world of business across sub-Saharan Africa. I'm Akin Obake. Now, this week's highlights from West Africa is an exclusive with Alain Ebobise, the CEO of Africa 50, and he tells us how the continent can pull in stronger infrastructure investment inflows. From our East Africa end, we look at insurance business in Kenya, and it's projected to contract this year due to policy measures taken effect following the government's drastic changes in pension savings. But let's get right into the details of these and more with our first crossing to South Africa. My colleague Palesa is on standby to bring us discussions that shapes the region this week.
The largest international meeting of the African private sector took place earlier this month, where 2,000 business leaders, investors and policymakers around the world convened to highlight the private sector's role in Africa's development. My colleague Kenneth Igbomo caught up with Akinwumi Adesina, president of the African Development Bank, to unpack the progress made by the forum. For more, let's listen in.
Infrastructure has to be financed also a lot by the private sector. So we're trying to actually get the private sector to invest in it. And what makes this particularly exciting are the range of projects that Africa 50 has been able to do in a very, very short period of time. I feel that it's time for us to begin to talk about how to scale things up. And so the Africa 50 set up an Africa Infrastructure Acceleration Fund, which is a private equity vehicle, again, $500 million that is going to invest a lot also in infrastructure. And also, I helped to inspire the creation of what's called the Alliance for Green Infrastructure in Africa, which is going to mobilize $10 billion for greening the entire infrastructure space in Africa. Most of our infrastructure are yet to be built, and therefore we have to start green. And you're looking globally today, you have about roughly $545 billion of assets of green bonds globally. But Africa accounts for 0.2% of that. But if we make sure that we are doing a lot of renewable energy, we're greening our already brown infrastructure by making them more climate resilient, then we can attract quite a lot of that in financing. So that's really what we're talking about here at this forum here.
Because I'd like to borrow from something that was also said here at the forum, borrowing the word from Tijan. So talk about thinking better, working better, and acting faster, and speed is something that we need for the continent right now.
Absolutely, and that's exactly why we created African Development Bank together with Africa 50 and Africa Union, what's called the Alliance for Green Infrastructure that I talked about. This is going to be the biggest platform that will prepare, green infrastructure for Africa. So prepare the projects. We're going to put in $100 million in project preparation and $400 million in project development and mobilize $10 billion. That is the scale at which we have to continue to work. But the thing that is actually quite exciting in this discussion is how we've been able to succeed in a very short period of time to get the institutional investors to invest. Globally, you have about $145 trillion of assets under management by 2026 globally, and yet we have all these billions of dollars in infrastructure. In Africa alone, you have $2.5 trillion of assets under management. But if we are able to actually get a lot of those institutional investors investing in infrastructure, we will close it very fast. So I'm very delighted that the Africa Infrastructure Acceleration Fund, which Africa 50 has launched, has attracted 10 institutional investors in Africa, which is a first. So which means that institutional investors are beginning to realize that there are lots of money to be made actually in infrastructure. And a lot of what we do at the African Development Bank over the last few years is what's leading to this. Because we've done, as you know, a lot of synthetic securitization, of moving some of our portfolios that are actually either on our government sovereign operations to the private sector. We did that, $1 billion, non-sovereign operations to the private sector, which include Africa 50 and other global institutional investors who are taking an Africa risk for the first time. We did that in 2018. Now, last year, we did another one, $2 billion, with $1.6 billion risk guarantee by the UK government to free up $2 billion, again, to do climate investment in climate resilient infrastructure. So I think right now we know that institutional investors can be assured that there are streams of projects that are bankable. Secondly, these projects have been de-risked. Third, they have streams of income, revenue, therefore they can We've covered the project development cost and the high risk part of it. So that kind of happened. And that's how we have to make sure that we finance infrastructure in a way that essentially optimizes your capital, making sure it's much more efficient, make sure the governments alone are not bearing the cost of infrastructure financing, and create a way of transitioning brown infrastructure to the private sector and free up space for the government to do it. So we're deploying quite a lot of financial innovations to do this. I'm quite excited about it.
And in other news, Zimbabwe's election campaigning is in full swing as the mineral and agriculture-led economy heads to the polls on the 23rd of August this year. CNBC Africa's Godfrey Mutizwa caught up with the presidential aspirant Xavier Kasukuwere for an update on his plan to restore confidence and bolster Zimbabwe's economy. Let's listen in.
Between 2018 and today, and the field is a new field. It's a different field. We are bringing in new energy to this field. If you look at it, people are just not going to vote. Many people have decided to stay away from the vote.
Is that what you're getting from the ground?
Of course. And that's why I have come forward, because people have said, look, there are no candidates here. This thing is not working. There are no alternatives. And we've brought in that seriousness in the market. And really, our policies are resonating with the society. Our determination to fight corruption, to renew the leadership of our country, to reconcile our people, to rebuild our institutions, to revive the economy, as well as reform our institutions. Most of our institutions are serving or are captured by individuals. We need to fix that. We need to bring order. Zimbabwe requires somebody who says, guys, from today, it's a different ball game. Let's follow the law. I'm not going to be taking any, nonsense. I have to lead the country for everybody to benefit.
Have you considered teaming up with, I'm going to be controversial and say either with Mr. Chamisa or with President Mnangagwa?
Well, let the people decide.
Have you considered it though?
No, I've said, well, obviously, we consider all these permutations.
Have you reached out to any of them?
No, you don't have to. We'll talk about that once we've crossed the river. Let's first of all cross the river.
Okay.
It's important, however, that we unite all the forces after elections and get to speak with one voice, confront or engage the world as Zimbabweans. All I want to pray for and want to see in this election is an election that is free and fair, that sends a very clear message that Zimbabwe has come around. We're able to conduct our elections peacefully, and the outcome is respected by everybody. Whoever wins must be congratulated by everybody.
So, which brings me to my next question, which is in part tied to the answer that you have given. So I wanted to know what percentage of the vote you think you're going to get.
Well, I'm going to win, obviously.
Are you going to win?
Yes. Why not? Who's there to defeat me? Oh, I mean, honestly, if I go in campaign and I'm going to be on the ground, who will defeat me? What agenda, what program do they have? Emerson has failed for the past 5 years. Look at the level of corruption. And he can't even answer accusations that are placed on his doorstep. That already has destroyed the confidence. Our people are on the queues. Pensioners' funds have been eroded. We need to fix. You need somebody who has a great understanding of to handle this matter. The land question needs closure. Okay? The issues of material needs closure. You need somebody who can say to the business, yes, we've agreed. Let's move.
Let me hear your ideas around closure on the land question, since you raise it. The government currently has put together a plan wherein they are going to compensate the former white commercial farmers. What is your stance on that? How are you going to get closure on the land question?
Until and unless you also address the ownership of the existing piece of land, who is holding what, you are dragging everybody on a 3.5 billion debt, when the individuals who have, some have more farms than one. Are you saying that these people must just get away with it? Let's talk about the tenure system, which says 99-year lease, especially for the A2 farmers, before we talk about the A1s.
A2 farmers too, for the benefit of those people who don't understand Zimbabwe, these are black-owned farmers, right?
Give them title, then pay. And then we can talk of compensation to those who say their land was theirs, or the investment or the improvements were theirs. As it stands, we are now penalizing or taxing a teacher for Kasukwere who has acquired or has been given 4 or 5 farms. That is not fair. In my view, the first port of call is to say, right, line up, every farmer, how many hectares do you have? These are big pieces of land. Let's sign an agreement. this is what you're going to be having, pay for it.
That's it from the Southern Africa team. It's back to you.
Thanks for the update there, Palesa. Up next, we can now cross over to East Africa to join Sarah.
Well, thank you, Akin. The insurance business in Kenya is projected to contract as new policy measures take effect following the government's drastic changes in pension savings. Here is a conversation we had with Harold Mbati for more.
There are two specific taxes that will definitely have an impact on the insurance industry. One is the value-added tax on claims, any payouts that are recovered by any insurance policy, and also the increase in the pay-as-you-earn tax for income above 500,000 shillings by 5%. That's from 30% to 35%.
Well, let's talk about specifically that plan to tax insurance payouts. How is this likely to really hurt the attractiveness of the insurance industry, especially looking at how the penetration of it is below 3%? How is this likely to affect the attractiveness of the insurance industry?
Yeah, so the current penetration, the insurance penetration is actually just about 2.3%. So really struggling to get to 3%. Over the last couple of years, we've seen the insurance premiums going up, and that by itself has actually made it difficult for buyers of insurance to actually afford it. So by increasing the tax, or by introducing the value-added tax on claims, or what you recover as a payout in case of a claim, then it makes it a bit more difficult by the fact that when you actually have a claim and you recover, you expect that what you recover is meant to bring you back to the financial position that you were in before. But in this case, you will then end up being 16% lower. What probably you may start seeing is that when you have to buy your insurance, you have to consider the value-added tax or component on it, so that if your value was X, then you have to probably be looking at a higher value to probably cater for that particular tax.
Harold, I'm curious to know, what was the government thinking behind this particular tax of the payouts? I mean, we're already seeing the insurance penetration is struggling. What was the thinking behind introducing this tax?
I think, in my view, so first of all, the government itself is a big buyer of insurance. So you expect this tax itself to actually hit them as well. Now, my view on that is the fact that I think previously, once you recover a claim from a certain loss, the insurance will most of the times pay you in terms of cash. So then in that particular case, you can decide what to do with the money. I think the government is trying to make sure that once you receive that payout, then you probably go back into recovering, say, your business, and if it's reconstruction, you actually reconstruct. And when you're purchasing your products or what you need for the process, you then have to go through you buy these products from people who are actually VAT compliant. So my understanding or my view on this, and because actually it's done in other countries, my view on this is the fact that I think the government is trying to see how they can make sure that the VAT component of any particular industry is then followed through back to back.
So with this new tax reforms, how do you see the premiums aspect of insurance being affected?
I expect the premiums to go up, and this, I think, will automatically go up by the fact that the values at risk will also go up. So the values of the products, of the insurance products, are expected to go up by a certain margin of the VAT. So with that particular context, you will expect the insurance premium to actually go up to cater for that difference in value that then would have gone up because of the introduction of the VAT on claims.
Africa has long suffered from a risk perception, one of the main factors contributing to the continent's estimated $200 billion trade and investing financing gap. Just this week, a UNCTAD report noted that FDI flows to Africa had dipped to $45 billion in 2022, and this is from $80 billion in 2021. CNBC Africa spoke to Manuel Moses on this and more.
No, risk perception is also a reality. So perception is reality. We can never escape from that. Situation. It's not just an African problem, but I think you can almost say all the developing countries face that challenge. So we are not an exception to that issue. So the challenge then is that how do we, show the opportunities that Africa has despite the perception of risk. So, it means bringing people to the continent, getting them to understand how we actually operate, and showing them the numbers that actually the returns that you get when you invest in Africa are slightly better than you would get elsewhere. So it's going to be a journey. It's not going to be easy, but we will be doing our part to change that perception of risk into getting the actual data which says otherwise.
And talking about roles, what then do you think institutions like yours can play or has been playing to try and close this continental financing gap that is caused by the risk factor?
Yes, indeed, that's exactly why we formed, and to try to address that issue. Firstly, the member countries realize that they can never win that argument if there wasn't a third party, honest broker or neutral party that can actually stand in the gap between the governments and the investors. So we were created to cover that gap. Obviously, we needed to be credible as that third-party neutral person, and to do that, we worked very hard over the last 20 years to get an investment grade rating by S&P, A, stable. It has been like that for a long time, including during these difficult times of COVID. We're also rated by Moody's. A3 positive, and they gave us a positive outlook despite all this. So that gives the signal to investors that indeed you don't have to only take the risk of the African government, but within our guarantees, with our insurance, you are actually also getting some investment grade protection. So that's how we have helped to now de-risk trade and also to de-risk investments coming into the continent. And the numbers show, when we look at when we started 2 years ago, we were just a small institution, and cumulatively we have done close to $71 billion at the end of 2021, and in 2022, which we are here for, at the annual general meetings, we added another $8 billion, making it $80 billion of trade and investment that we have supported over the last 22 years. That again is a testament that indeed what we are doing is answering to the call of how do we actually manage the actual perception of risk by giving this protection.
What kind of conversations are coming out of it? What kind of numbers can you whisper to us? What is actually important for us to hear at this point?
Yes, so despite the very, very difficult period what we're coming out of, which is from the COVID, 2021, 2022, we have managed to post fairly good results. Our gross exposures were for the year 2022 were $8 billion, and also our net profits $32 million, and our net assets and grew by about 8%. Obviously, we lost, some indicators are not as good as we would have wanted, but overall, producing such a result in these difficult circumstances, we believe was a positive thing. We will also declare a dividend of $8.2 million to the shareholders, just showing that indeed, we're not just developmental, but we're also sustainable and profitable.
That's all from East Africa this week. It's back to you.
Thanks, Sarah. Let's now get into details from West Africa. We start off with Nigeria, where the country's Federal Inland Revenue Service says it will start the collection of value-added tax from traders in the informal sector using a unified systems technology. Now, the big concern now remains compliance. Chamberlain Peterside, the CEO of Excellent Capital Advisors, shared some insight into this development. Take a listen.
I think that I personally, commend the effort. I think that there's a large part of the economy that is within the informal sector. Yes. And with the increased effort to, integrate that into the modern formal sector, I think it's bound to have, benefits overall, both on GDP and as well as the tax revenue. However, we have to be very careful with trying to levy tax, VAT, on market traders. You have to be aware of the Tax Finance Act of 2021, which states very clearly that, SMEs that operate with less than 25 million naira per annum in turnover are not liable for VAT payment. Secondly, you know that a lot of the market transactions are mostly for consumer products, food products, pharmaceutical products, which again are not liable for VAT. So therefore, it is assumed by experts that at least 90% of the market traders might be exempt and might not be captured in this new effort. However, where I think it's commendable, David, is that anything that we could do to begin to integrate the informal sector, begin to capture their data, begin to know who is who overall in the economy, I think is a positive step. Yeah. We have successfully captured and embedded the informal sector in the telecommunications business. So you can't get a phone line right now unless you have your necessary IDs. Neither can you hold a bank account unless you have a BVN. So I think this is also a right step in the direction where you begin to see who are the potential taxpayers, maybe not for VAT, but for the taxes that are that are due to the government at the local and the state levels. So I think a collaborative effort with MATAM, Market Traders Association, and the states, I think would begin to help us grow the tax net first and foremost, before you begin to talk about growing the ratio of tax overall to GDP. So I think it's something that the government should pursue very aggressively.
And according to some school of thought now, the development of effective tax strategies to expand our tax base within the informal sector needs to be hinged on efficient collection, equitable, which both really understands the perspective of revenue and also justice and fairness. Now, when we have to deal with the issues around the multiplicity of taxes, with this value-added tax direct initiative, do you think with the utilization of what it terms the unified systems technology that will eliminate the multiple layers of tax collectors we see play out within the marketplace?
I think that it's possible. It's possible if the FRS were to collaborate very closely with MATAM as well as the states. You do have to realize that the states also have their revenue agencies, and they do have local taxes and levies that are usually due from artisans, traders, and all sorts. So trying to collect VAT.
Well, next up, in preparation for the first close of the Africa 50 Infrastructure Acceleration Fund, African and global institutional investors have signed subscription agreements and letters of intent for the development of critical infrastructure across the continent. Alain Ebobija, the CEO of Africa 50, says there's the need to scale up and mobilize more funds to accelerate infrastructure development on the continent.
We're having our annual shareholders meeting and also the first Infra for Africa Forum, where we come here, first of all, to celebrate some of our achievements, but also to discuss about what we want to do going forward. So we discuss with our shareholders, but also with a number of stakeholders about the challenges, but also the opportunities that the infrastructure space in Africa offers. But one thing which came out very much from these discussions is that Africa is and should continue to be on the driving seat, working with global partners, of course, but us Africans showing the way into how we want to develop our continent through infrastructure investment, especially increasing private investment in infrastructure in Africa.
All right, let's talk about what you're planning to do going forward now, and demystify the Africa Infrastructure Acceleration Fund, and how that sits into your core pillars as an organization.
First of all, I should mention that what we've been able to achieve so far at Africa 50, in 6 years of operations, we've been able to invest in 21 infrastructure projects in Africa across 22 countries for a total combined value of the project that we have supported of over $6.6 billion, demonstrating that we can do these things with speed without compromising the quality. Now, in order to move forward, we need to go a bit bigger. We need to operate at scale. And that's why we need to mobilize more funds, especially regional funds from pension funds from Africa and also globally, to scale up our activities. This is one of the reasons why we created the Africa 50 Infrastructure Acceleration Fund, which is a $500 million fund, which today we signed with a number of institutional investors from Africa, but also global ones, to support as future limited partners for the fund to come in and invest in the fund, which in turn will invest in quality infrastructure assets.
All right, but talking about the success of this fund as you're planning ahead, speak to why it's very crucial to have African institutional investors partake in this fund.
Well, it's very important. So I mentioned earlier that Africa should be in the driving seat for Africa's development. It has to start by mobilizing African resources to fund African development. Of course, working with global partners, but the driving seat should be Africans. So for us, mobilizing long-term savings from within Africa, but also, of course, from outside Africa, but with a strong focus from mobilizing the funds from Africa is very important. And we were very pleased that today, at the signing of the Africa 50 Infrastructure Acceleration Fund, we had over 12 African institutional investors signing to back the fund or to express the intent to back the fund. So this is very important because you see, Kenneth, when you have so many African institutional investors backing a fund, then global investors also will be interested because it has to start from us. And that's why I'm so interested, I'm so pleased with what we've done today.
Yeah, because talking about what we've done today, we're here in Lomé, Togo, and I see that you also did some signings as well with the government here, talking about asset recycling. Can you put that into context for us and what you hope to achieve with that?
Yeah, absolutely. I do believe that here at Africa 50, what we are trying to demonstrate is that we are innovating for growth. We are trying to find new ways of developing projects.
And on that note, it's a wrap on this week's show. Thanks, Palesa and Sarah, for the regional update. Do catch us same time next week for more exciting conversations. I'm Akin Obakeye. Do enjoy your weekend.